It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
What is coming to me?
Welcome to the podcast. Sorry about that. Just getting some things squared away. Okay, so we're heading towards the end of the week. I said when all this rally started on Monday and Tuesday, I said by Wednesday or Thursday, I said you're going to see this market pulling back because the big institutions, of course, they start digesting. In other words, the institutional money is what drives everything. And when you get these, knee-jerk reactions, then they start to digest it. They start looking at it, and then they say, okay, wait a minute, some things don't square here. That's what's going on right now. And there's also a lot of profit taking going on. And so I want to talk about a few things today. What's interesting to me is that silver and gold, copper, going through the roof. We know that. We have a little pause here, but I just see even the dollar going up. I just see that the gold market, silver market, copper market is just going to continue to rally. I see gold specifically as well as silver, but the central banks buy more gold than silver, but silver's outperforming gold. So I just don't see that changing. There's a tremendous fear. And as much as Washington tries to sugarcoat the market, the labor market, the facts are just sitting right in front of you to digest and look at. And for God's sakes, you got to be nuts to listen to these people. The U.S. government is spending, and boy, it's soaring. Let's just go back and think about this. In the past century, I know that's a long time, but we're going to break it down even further. Spending by the government is up 10,000%. That's why gold and silver keeps going up. Now, if you go back and take a look what the government has been doing, and I got some good numbers here for you. If you look at the 25 years that's passed, think about this. Government spending is going up 292%. Now let's break it down to the last decade. Last 10 years is 90%. What are you, nuts? That's just insane. But the crazy thing is, it's not just the spending, but what the hell are they spending it on? More roads to nowhere? I don't know. But this kind of spending, these kind of deficits, they just won't stop. So one day, I don't care, you're going to say, boy, I wish I bought that silver, I wish I bought that gold. And I know every day it gets going, and if you didn't get in early, I know you look at it and you say, God, it's getting awful high. I don't think so. Now, we're going to get, and we have been getting all along, 5 to 7% corrections. We've already had 3 of them. But we're not worried about those as long as the volume continues to come in, and the volume coming in from the central banks. So that's the safety net. And there's no, as I said, when we had that big sell-off, the central banks on Monday and Tuesday, everybody thought, oh boy, gold's going to go down. The central bank's going to start dumping because of what's going on. No, they didn't dump anything. So again, your gold, your silver, your copper, it's worth staying with, okay? And the beautiful thing is, when you know how to sell short and you know how to buy, it doesn't matter. You don't follow the noise, you follow the money. So if all of a sudden silver pulls back or gold pulls back 5, 10, 7%, you're going to make money. If it pulls back 20, 25%, you're going to make money. You then control how you trade. We can't control what the market's going to do with all these gangsters, all these gangster banksters, all these guys in Washington. They read the budget deficits, they read everything. But if you know how to sell short, that's your safety net. So let's take a look at, everyone's telling us how great the consumer is, he's strong, but yet October sales don't show that. Now, in November didn't show, now we saw a little pickup over the holidays, but that's tanking, and the money the numbers you're getting are not right numbers, not correct, because the numbers they're giving you, they say, well, sales are up 30%, sales are up 20%, but it's prices that are going higher, not people spending more money, so they deceive you. So again, these jibber jabbers on these TV shows are using the term resilient. Boy, is the consumer resilient. We just have a temporary softness after the holidays, just temporary softness. Well, the job numbers don't tell us that. We have, no matter what they tell you, we have a weak job market. We really do. I mean, our economy is in tough shape when it's coming to employment and jobs, but they hide all that stuff. So, again, when you look at the numbers, they give you these great numbers, but remember, they're excluding food, gasoline. I mean, think about it. All these numbers they give you, food, autos, gasoline, I mean, those are, again, they exclude those, so they paint it with a brush, oh, things are looking good. But it doesn't matter, okay, to a trader if it's good or bad. Sure, it matters to the consumer. The consumer's getting screwed all along, okay? Yes, gasoline prices are coming down. Again, we love that, all right? But there's not, people just don't feel it. People don't feel, well, things are really good again. I really like this. I'm feeling better. Nobody's got that feeling. Not until you cut health care costs. You got to cut those health care costs. And the president's trying to do that. The Democrats are going to block them. That Obamacare was the ridiculous, it's so stupid. You had to be nuts to vote for that, any congressman. It had to be nuts. When Pelosi came out and said, well, let's vote, see what's in the bill. Then we can take a look at it. So let's pass it, and then we'll look into it, see what's in it. Only that crook. She's crooked than a corkscrew, her and her husband. Only someone like that can make a statement, get away with it, and they passed the bill. It's ridiculous. So again, auto sales are dropping. That's the big thing you got to look at. Auto sales are dropping because we have a problem with affordability. Affordability is collapsing. When they say the holidays was really good, sales were good, it's credit cards, all credit cards. And credit cards right now, debt is huge. So when you hear how strong the consumer is, he's resilient, he went spending over the holidays, yeah, armed with credit cards, not cash. You look at auto sales, that tells you everything right there. People love automobiles, and when auto sales are tanking, it's over. And remember, why? Because we still have high interest rates when you go buy a car. We still have, and look what they're doing, they're extending loan terms. Pretty soon you're going to be able to get a 20-year, 30-year mortgage on your car, for God's sakes. What are you, nuts? And we also have delinquencies that are exploding, but nobody says anything about that. Everything's wonderful. So what's really the important part of spending is discretionary. That's right. When you pay your taxes, you pay your bills at home, whatever you got left, you want a pile of that stuff. That's when you go out and you start buying discretionary. You start buying furniture, and you start buying automobiles and vans and trucks and stuff you really don't need, but you go buy it. We're not seeing discretionary spending. It is down. It is tanking. So, and job losses. They're lying like hell about the job losses. They are. Again, take a look at the food services. Who would ever think they're getting hit this hard? And they are. And the job losses in hospitality sector is really declining. We haven't seen that before. Those were the sectors that are always holding up the bridge, so to speak. So when people aren't going out and they're not buying furniture, they're not buying sporting goods, They're not out buying clothing. You don't see lines at retailers. You know something is really wrong. You really do. And, and again, our 2026, it's not going to be any better. We changed the pace, but we still, the things that caused 2025 to be tough is back in 2026. Nothing changed, nothing. And so as we move towards 2026, the rising volatility we have, the capital formation is tanking. What does that mean? Well, it means that the amount of money going into new factories, almost nothing. How about money going to business investment? Almost nothing. How about money going to new equipment, new technology, building new buildings, infrastructure? Nothing. Business investment is tanking. That's what you look at. Now, does it affect the stock market? No, not really, because all they got to say in the stock market every earnings quarter is, we beat expectations. We beat expectations. Oh, and guess what? Going forward, it's going to be wonderful. This company's going to do well going forward. All they got to do is say expectations, okay? That we beat expectations. They don't, earnings, I told you this in the last couple of days. I never got so much email when I said this. They didn't believe me that people were looking up and said, gee, you're right. I never understood that. Stocks don't go up on earnings. Earnings day, a stock will pop. That's it. It stops. And some people will get into a stock when they say, boy, this stock, look at this stock, real strong. You know, this is a real strong stock. Buy, buy, buy. And doesn't move anywhere. Doesn't move, even though they said it's got, you know, solid earnings, solid quarter. Doesn't go anywhere. So remember that earnings nonsense, again, they're going to keep pushing these stocks higher and higher when the economy is getting worse and worse. And when stocks should be going down, they're going to keep pushing up and up with their little trick. It's an open trick. People don't know what earnings do. It's not earnings that drive your stock price. It's not earnings that drive, oh, God, I'm up 30%. No. You'll be up 30% if they keep lying about expectations. So that's what all traders look for. What expectations? That's why it's so important during earnings season. Listen about the expectation. So with all this said, I know it sounds negative. It is negative, but it's the truth. You got to be nuts not to think it's not the truth. So, I mean, our dollar is so weak. I mean, imagine we lost almost 11% in the first half of December in the dollar. Yeah, it's going up now a little bit. But take a look at the bond yields, what the bond yields are doing. The bond yields always tell you the truth about the economy, the truth about the stock market, which direction is the market going. And the bond markets, the yields are just soaring. Remember when they said the yields were going to drop below 3%? We're going to hit 5%. You watch. In probably 6 months, we'll be hitting 5%. That's when the market will tank. So when anybody asks, well, what do you think the market's going to do? Yeah, it's going to do whatever it wants to do. Okay? But and again, they can play this earnings game, beat the street by a penny to keep moving the stock market up. And that's what they've been doing to mask the market. And they also, remember the S&P 500 game, how that works. Okay, when you look at these market caps, you can take a stock like, take the Magnificent Seven, the S&P 500. Take a stock like Apple, Nvidia. Take a look at their market cap. And take a look at the market cap on Ford, right? I wish I had those numbers. I think I had them somewhere here if I could get them for you. I don't know if I have them. I thought I did this afternoon. Let me see if I got on my note page. No, but the numbers are crazy. And I thought I had them. But anyways, the market cap, remember the S&P is weighted. So if you get these 10 stocks that drive that 17%, remember we're up 17% in the S&P 2025. 60% of that 17, it was driven by beating estimates, not earnings, beating estimates. And again, It's all just a couple stocks. And every time you can have NVIDIA, you can have Microsoft, and you can have Ford. And if Ford goes up 10%, the market's not going to move. NVIDIA, Apple goes up, the stock market will move because it's weighted. It's all based on weighting. So you're getting from both sides. They're telling you how great things are in the market, and that the earnings are great, and that's when it's not the earnings. When I get back, I'll find those numbers for you because they're very interesting. Okay, so come back after the break, and I'll get those numbers for you. They're insane.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up, or why there's continued inflation, or why the bank rates are going up. So you understand, especially yields. The most important thing is to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
So, welcome back. So, again, if you know how to sell short and know how to buy stocks going long, you don't have to ever worry about the market. It doesn't matter. But if you're driving around your city or town and your car only had forward and no reverse, that'd be pretty bad, wouldn't it? Get into a lot of accidents, lose a lot of money. Well, what do you think happens in the stock market? Remember, Wall Street are selling you stocks with forward but no reverse. What are you, nuts? It's insane. It's insane. And people jump in and keep buying and buying and buying right at the peak. Now, I'm not talking about power stocks. We buy at the peak on power stocks. I'm talking about stocks that are just real garbage. They get a little move and everybody jumps in and buys them. So let's get back to the numbers. So remember, the chip stocks, even on this pullback, they're going up a little bit. And just always remember, should I buy chips or should I buy software? That's always the big question. Of course, banks, we're in the banks. But chips or software, which one should I buy? Most people don't understand how it works. Remember, chips, because chips drive the rally. It's chips that drove this rally in the last few days. Software doesn't drive rallies. Software companies don't drive an AI boom. they react. That's all they do. They simply react, nothing else. They react to the action of AI. They react. And then they piggyback. They piggyback. So always look for your semiconductors. Those are the leaders. That's where most of the money is going for development, okay? In fact, most all the money is going into these AI stocks. So, and when you look at, now, they also play another game you got to be aware of going into 2026 is the weighting. So when you take a stock, like the Magnificent Seven stocks, and let's just take Apple. It's up about, Apple's cap is, I think it's about 6%, okay, on a percentage basis. I think I have that rate, right? So so when you look at, if you take Apple cap is around 3 trillion, I'll give you the numbers, okay, and that's about 3%, that's about 6% of the S&P. And if you take NVIDIA, its market cap is 1.5 trillion, and the weight it holds in the S&P is 2.6%. Now let's take a giant like Ford. Now Ford's cap is 50 billion. The weight it holds in the S&P is only 0.9%. So you see what they do to you. So by playing the weighting game, you can have Apple go up, NVIDIA go up, and Ford doesn't move. So even if you have these great earnings on Ford, it doesn't move like Apple or NVIDIA or Microsoft or any of these AMD or any of these stocks. But so always remember, they always are going to try to continue driving stocks up by beating estimates, never mind the earnings. And S&P 500, it's a weighting game. So when you stay with your Magnificent Seven stocks, they carry the weight. Nobody pays attention to Ford. Nobody pays attention to the other stocks because they don't move. They don't move the market. You can have a bang up here at Ford, bang up here at GM. Doesn't move the market, doesn't move the stock because it's based on weighting. So you got two games going here in the market, okay? As long as you remember, I better learn how to sell short, then I'm not going to get caught either way. So you have that waiting game, which is terrible. And most people don't understand that. They say, why isn't my stock going up? Because nobody cares about those stocks. They only care about the heavily weighted stocks in the S&P, which there's 7 of them. And so because of the big weights, when they move, they take the whole market. When Ford or GM or Coke or any of these stocks, they don't budge. It's the same thing when someone says, wait a minute, they just said you had great earnings, but my stock's not going up. Now, your stock will go up, I always tell you, it'll take a pop in earnings season, and you sell into that pop, put your money in the pocket, then reset a stop and wait till it makes a new high, goes above that pop. But the market's rigged against you. The retail investor, they don't understand it. The worst rigging is they don't want you to sell short. So you got a weighting problem on the S&P, and everybody's looking at the wrong thing. When you hear again, right, boy, I think I better get in that stock in a hurry because I don't want to miss out. This stock is solid earnings. Oh, and they're projecting going forward is going to be tremendous. So they use the projection going forward, and they use this stupid. It's just unbelievable. Nothing to do with earnings. Beat the street by a penny. So that's what's going on there, okay? So let's listen to some of these cuts. I mean, you talk about BS. It is unbelievable, right? They just totally lie to us. Let me see if I can grab my cuts here for you. We'll have some fun with them. I grab them here. Okay, let's see what we got here.
What we really want to see is the economy doing well, and we're seeing signs of that going forward.
The economy's doing well. We're seeing signs of that going forward. No, we're not. Where are we seeing signs the economy going forward is doing well? Where? The service stocks are getting clobbered. People, 90% of the people aren't, they don't have any money. In the Christmas shopping, all that is credit cards. The amount of debt people are carrying is horrible. And the amount of debt I just went over, either the government is carrying, is horrible. Now listen to this. They try to snow you with this.
If you look at the first half of the year, our economists are expecting GDP growth of north of 3%.
North of 3%. Think about what they're saying. It's not going to happen. It's not going to happen because the consumer sentiment is terrible. We know that too, don't we? So they're trying to sell us a bill of goods.
But one change we do see this year is a broadening. We are expecting economic acceleration. We've been recommending small caps. We've been recommending stocks exposed to the consumer. That's very different from most of 2025.
Unbelievable. Unbelievable. Let's think about this consumer sentiment, right? It's at a record low. 53.6 dropped to 5.1%. The consumer, they have no confidence. The consumer confidence has dropped 5%. That's since July 24, I'm sorry. Consumer confidence has not recovered. So, and then the applications at the bank, the denial. Okay, and that's why the other day it was interesting when oil was going up, and the analysts and everyone saying, well, that's going to, oil's going up, that's going to hurt the banks. And I think, well, yeah, I understand that. When oil goes up, gasoline goes up, people don't have much money for discretionary goods, they don't go get loans. I get that. Anytime oil goes up, gasoline follows it, then of course you're going to have a problem. People don't have enough money. And 90% of the people in this workforce, they have no money. They have no savings. Everything's on credit cards. So the application denial is soaring. It's up almost 24%. Application denial, you nuts? Mortgage refis, over 50%. It was 46. Now it's over 50%. 50%. That's insane. I mean, I'm talking about refis. Everybody wants to refi their home. They're not able to. And same thing with applications for auto finance. Huge rejections. That's about 15%. Credit card applications are up over 22%. So wages are not keeping up with inflation. We know that. We also know that we have, in 2025, record job losses. They lied to us. Finally figured it out. It was 1.1 million in job losses. What are you, nuts? You think we're turning that around the way they're speaking? Oh, that's gone now. That's gone. Just like, oh, by the way, all the things that has been destroying and going to destroy the AI sector, that's all over with now. That's all over. All that fear's gone now. None of that's going to happen. No more complaints. People aren't complaining anymore. Investors aren't complaining. They're not getting any returns on their earnings. On their investments, putting billions and billions, and they're not getting returns. They make more money going to get a scratch card. So all this was happening November and December. The market's selling off. Oracle missed its earnings twice in a row. And we did have record job losses. Now they're talking, don't forget about the job losses. Forget about the job losses. Doesn't matter. We're doing terrific now because MU is up. Yeah, Micron's up. We're doing good. Even though delinquencies are at a 30-year high. 30-year high. You see, I love the word they use. Consumers are resilient. They're resilient. That's just a bunch of bullshit. It's just, I hate to use that word. I don't know what other word to use. You got to be nuts. And again, repossessions are soaring. And everybody thinks just because we flipped the calendar page from December to January, those are gone. Don't worry about that. Don't worry about it. Auto loans, okay? The run rate right now in repossessions, 11 million. 11 million. You got to be insane. Hourly wages from 2020 to 2025 up 5%. It doesn't even touch real inflation. Doesn't even come close to it. Real inflation. We're talking real. Not all these game play. Oh, let's take gasoline out, food out, take everything out, take clothing out, toothbrush out, everything out. Real inflation is near 8.5%. Wages are only up 5%. The average cost of an auto has gone up 38% since 2020, 2025. The average home, the cost since 2020, which was $380,000, is now 49% higher. Let's go take a look at some stocks. Look at my charts. I mean, it is amazing what's going on here. So people get caught into the stock. I mean, everybody just keeps piling into Micron, all these semiconductors. And you got to be really, really careful. Watch this. So if you take a look at TSM right here on my Pro 2, see it right here? That's doing really well, isn't it? Yeah, we're in that. We're in MU, Micron Technology. All investors are in this. Doing great, right? And LRCX, that's doing great. But wait a minute. And AML is doing good. I'm sorry, ASML is doing good. So you got these stocks, they're doing good. But look at this. When you have these chip stocks and you only have 5 stocks, and NVIDIA is doing terrible, look at this. Intel is doing terrible. You got AVGO is doing terrible, Broadcom. AMD is doing terrible. MRVL is doing terrible. Now you go down, here's the scary part right here, software. Software is the scary part. Remember, software piggybacks chips, but they're not piggybacking. Watch this. Google is, okay, and you have CRM is, PLTR is, but watch this, the big ones. Adobe is not. Look at Adobe. Turn into a short. Look at i2. Look at that. All red. Look at all the red. Look at Crowd, Microsoft, Intuit. When you have a divergence like that, that spells danger. But if you know how to sell short, don't worry about it. We'll help you with that. philsgang.com. You got to be nuts. See you on the chart.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to